Ladies and gentlemen, good day and welcome to the Q4 FY24 results conference call of Shri Keshav Cements and Infra Limited, hosted by Kirin Advisors Private Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Abhishek Yadav from Kirin Advisors Private Limited. Thank you, and over to you, sir.
Thank you. On behalf of Kirin Advisors, I welcome you all to Shri Keshav Cements and Infra Limited Q4 FY24 conference call. From the management team, we have Mr. Venkatesh Katwa, Executive Director and Chairman, Mr. Vilas Katwa, Managing Director. Now, I hand over the call to Mr. Venkatesh Katwa. Over to you, sir.
Good evening, rather good afternoon, everyone. I'm Venkatesh Katwa. I'm the Chairman of Shri Keshav Cement and Infra Limited. Welcome and thank you for joining the conference call for Shri Keshav Cement and Infra Limited. We are delighted to have each one of you here and we explore and discuss the financial performance of Q4 FY24. So before we dive into the details of this quarter, let me offer a brief overview about our company and its robust business model. So Shri Keshav Cement and Infra Limited, what we call it as SKCIL, is engaged in the manufacturing of cement and generation of solar power and distribution in the state of Karnataka. The cement plants are located at Bagalkot district in Karnataka and the solar plant is located at Koppal in Karnataka. The company supplies cement in North Karnataka, coastal Karnataka, Goa and some parts of Maharashtra. The company has a network of over 350 to 400 distributors and retailers and about 10 to 12 solar power consumers. Since April 2018, the company has been meeting 100% of its energy requirement through renewable solar energy. The cement plants of SKCIL are probably the only ones running in India with 100% green power energy as on date. All the plants of the company, resulting in 75% reduction of the power cost. So we are delighted to share positive updates regarding our ongoing capital expenditure aimed at expanding, debottlenecking and modernizing our capacity. The cement plant is set to be commissioned by the end of Q3 FY25, which is this year, with the construction completion targeted for by November 2024, resulting in a total capacity of 1 million ton per annum. Solar generation capacity will enhance by 3 megawatts by the end of Q1 FY25, which is by mid of June next month, with the power generation expected to add another 4 to 4.5 million units. So currently, the company is generating about 56 million units per year, and this will add to make it another up to 60 million units upon commissioning. We have strategically positioned the company to increase the market share in the existing 250 to 300 kilometer radius by expanding our rural network and supplying to the larger clients. We also plan to enhance our cement capacity utilization to on the new capacity to about 60 to 65% in FY26 and 70 to 75% in FY27 and so on. Our commitment to excellence is reflected in recent accomplishments like recognition by Bureau of Indian Standards for maintaining the highest quality of cement without any product failures for the past 3 years. Furthermore, our strategic capex initiatives, combined with reduction in raw material prices and expansion of our solar capacity, are aligning favorably, setting the stage for promising growth prospects for the remainder of FY24 and beyond. Also, we are pleased to announce that the permission has been granted for the expansion of a solar plant, which will see the light of the day from next month onwards. The total capacity will increase from 37 to 40 megawatt capacity. These developments further solidify our position for continued success in the upcoming years. In Q4 FY24, now to speak about the revenue and the figures and facts, our revenue from operations primarily driven by cement businesses, constituting to around 78% of the total, with the remaining originating by solar energy and other sources. For FY24, the figures are similar to what we had seen in FY23, with cement contributing around 77.45% and solar energy and others contributing 22.5%. Moreover, the increase in both cement and solar capacity is set not only to enhance our top line, but also to propel our profitability at an exponential rate. We want to reassure the stakeholders that our comprehensive strategies are firmly in place, ensuring impressive growth in times ahead. Now, let me take you through the performance of Q4 FY24. In the fourth quarter of FY24, SKCL reported a total income of 36.85 crores. EBITDA witnessed a growth by 34%, reaching around 11.55 crores, while EBITDA margin expanded to 32% from 29%, marking a substantial rise. The company achieved a PAT of 2.41 crore, resulting in a PAT margin. Hold on, I think that figure is wrong. The company achieved a PAT of around 9.12 crores. So for the fiscal of FY24, the total revenues grew by 2.89% to 128.99 crore. EBITDA increased by 11.5% to 41.45 crores, and EBITDA margin improved by 264 basis points to 32.78%. The PAT surged 213% to 9.13 crore, with a PAT margin of 7.07%, and EPS diluted to 5.84, 2.8 times increase from the previous year. So these figures indicate a positive trajectory for the company's financial performance in the fourth quarter and for the full fiscal year. Looking ahead, we anticipate additional benefits from economies of scale as we triple our plant capacity, achieve higher utilization rates, and enhance our supply capacity. These improvements, coupled with a robust outlook for cement demand, will further enrich our performance. Our aim is to ensure sustainable business growth and strengthen our market position with a continued focus on expanding our brand. In summary, Shri Keshav Cement and Infra Limited emphasized notable improvements in margins during fourth quarter, and company reported positive trends, including an enhanced EBITDA margin and a significant increase in net profit margin. These developments signal a positive trajectory for the company's financial performance in the current quarter. So as we approach the question and answer session, I wish to convey my sincere gratitude to all the stakeholders. Your unwavering support and active involvement has been integral to our growth strategy, playing a crucial role in our success. We genuinely appreciate the significant contribution each of you have made. So with this, I'm pleased to open the floor for any questions and answers. Once again, thank you for your presence and ongoing support. Thank you.
Thank you. Ladies and gentlemen, we will now begin with the question and answer session. Anyone wishing to ask a question may please press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Hemant, an individual investor. Please go ahead.
Hi, sir. Good evening.
Sir, good evening, Hemant.
Yeah, my question is related to the current capex going on. So, what is the status of that capex?
So, as probably discussed earlier in the last quarter also, the capex is going absolutely fine. There was a delay on account of availability of water. Our district and taluka being worst hit on water resources. There was a request from the department not to use the water for any kind of activities other than for edible purposes. So in the last quarter, as we had mentioned that the project what is supposed to be commissioned by June has been postponed up to November. So other than that, civil construction, which was halted, has already started back. Almost 95% of machinery is already available on the site. So as such, other than what was not in our control, the project is very much at pace and expect to commission in by November or December of this year.
Okay. So we can start seeing the revenues from maybe Q4 of this year.
Correct.
Okay. And regarding the debt, we have taken some debt, right, for this capex expansion. So that debt will come in now, or it will come after the capex is over?
So the balance sheet is already showing the debt what we have taken. Out of 80 crore sanctioned and this thing, about 58 crores has been disbursed already. And the balance 22 crores will be disbursed in the due course of time. But overall debt, other than the new debt, it has reduced from 173 crores to 140 crores. That is because of the continuous repayment, which is why you also see a reduction in the financial cost. It has gone down.
Okay. Yeah, that's it. I don't have any other questions. Thank you.
Sure, sir. Thank you.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. The next question is from the line of Jay Shah from Yadav Capital. Please go ahead.
Good evening, sir.
Good evening.
So my question for the management is like, can you provide any production and sales volume for cement of Q4 FY24 and the full year FY24?
Yes. So for FY24, quarter to quarter, I can give a comparison. The cement quantity in Q4 of FY23 was 55,000 tons, and for Q4 of FY24 was 72,180 tons. So there is about the increase of around almost 17,000 tons in that quarter. For the whole year, it was 226,000 tons in FY23, and now it is 246,000 tons in FY24.
Okay. And what is the current capacity and utilization rate of our cement business, and how do you compare it to your previous quarters?
So Q4 of FY23, our capacity utilization was 61%, and Q4 of FY24, we reached the capacity utilization of 80%. So there is a continuous improvement in the dispatches as well as the areas that we are reaching it. So it's almost a 30% increase in sales as well as a 30% increase in the capacity utilization.
Okay. So, but despite the annual improvement, there was a dip in, EBITDA and PAT margin as compared to Q3 FY24. Can you explain the factors that contributed to this dip?
One basic reason is the pricing itself. Year on year, the pricing for you want a quarter to quarter comparison, right?
Yes.
Okay.
Like Q3 quarter.
Q3 of the... So, all right. I can give both the things. So, basically, when we go for Q4 of FY23 and Q4 of FY24, the prices, the net realization reduced from almost 4,000 to 3,500. 500 is on about 430, in fact, 430 rupees. So, that impacted the profitability of Q4, even though dispatch has increased. Even on the entire year, if you look at, even though dispatch increased, the prices reduced by nearly 2%. And even the power price also reduced by about 1%, which is why you must have seen the impact of that on some of these ratios. But if you look at purely from Q3 of FY24 and Q4 of FY24, even then there is a price reduction from around net, what we call is net cement realization, which means that the cost of naked cement, excluding the cost of logistics or anything, outside the gate, the price is reduced from 3,760 to 3,579. So that reduction also impacted the Q4, margins.
Okay. Thank you.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. Participants on the conference, if you wish to ask a question, you may please press star and 1. The next question is on the line of Vijay Chauhan from NCHSC Advisors. Please go ahead.
Hello.
Yes, yes. Hi.
Good evening, sir.
Good evening.
Yeah, so I just had some questions. The first was,
Sorry to interrupt, Mr. Chauhan. Your audio is not clear. Can you use a handset mode while speaking?
I'm calling from my handset only.
Sir, can you speak a bit louder? Because we are not able to hear you clearly.
Hello, now can you hear me?
It's still the same.
Yeah, a little better, but still we need a clear voice.
Uh,
So you can go ahead and shoot the question. Let me see if I can get that question as it is.
okay, sir. Sorry for the inconvenience. So I just wanted to ask that our revenue growth for FY24 was only 2.89% despite our robust infrastructure and real estate demand. What were the main challenges or factors that limited our revenue growth?
So two aspects. One is even though we had increased dispatches on cement, only Q4 saw a certain increase in and certain increase of push towards dispatches. Otherwise, the prices have been going down. So even though, like I mentioned, the quantity increased on a whole from 2,26,000 to almost 2,46,000, increase of 26,000 or almost 20,000 tons, which is almost 8.6% in the thing. But the price was pretty impactful. Like for example, the last year the price was around 3,810 rupees per metric ton, and this year the price is around 3,730 tons, 3,730 rupees per metric ton. Even the power price shrank from 6.97 average price to around 6.9 rupees. So typically this squared off any benefits we could have got otherwise from the increase in sales.
Okay. So I have one more question. Can you also provide an update on the status of our cement and solar expansion plan, and how much has been invested so far, and when we can expect the completion and commencement of the production from these projects?
Definitely. So cement expansion, almost 125 crores was the project cost. Out of 125 crores, almost 102 crores have been already been spent, and the civil construction is on 95% complete, and fabrication erection is going on right now with over 50% complete. So as we speak, it is expected that we commission by in the month of November 2024, November or December. So realistically, we can you can expect that by Q4 will be the first month where you will see the results of the expanded capacity. Regarding solar, 3 megawatt peak is expansion is going on progress, and based on the reports what I have on the ground reality, we should be commissioning in next 15 days.
Okay. And I had some another little question, sir. Given the competitive landscape, does the Karnataka market have the capacity to absorb the increased cement production once our new plant is operational after that?
Sure. So in capacity terms, even 1 million ton is a very minuscule capacity. With the kind of capacity additions of over 80 to 100 million tons, what we'll see in the next couple of years, 1 million ton is not going to be very significant. Secondly, our plant is located very close to the consumer market, unlike the larger plants which are set up at limestone cluster. So with the kind of consumption what we see around 200 to 300 kilometer radius, management is quite confident that we should be able to achieve significant sales improvement within the existing market.
Okay. And how have you coal and pet coke prices trended in Q4 FY24, and what is your outlook for these prices in the coming year?
So compared to Q4 and earlier Q3, the prices of pet coke have stabilized. So it is not further going down or rising up significantly. Whatever difference you see, it is going to be plus or minus 2 or 3%. But the biggest, pet coke reduction has started in Q4 of FY23 itself. So having said that, in the coming years, unless there is no significant any political atmosphere, I mean political means any violent political atmosphere outside, the petcoke prices are expected to remain stable going forward.
Okay, sir. Thank you for the great response, sir.
Thank you.
Thank you. The next question is from the line of Shweta, an individual investor. Please go ahead.
Good evening, sir.
Yeah, good evening, Shweta.
First of all, congratulations on your FY24 results.
Thank you.
So, could you elaborate on your current dealership network and any expansion in FY24? Is there any plans for FY25 to enhance the distribution?
Absolutely. So, as of now, like I mentioned, we have about 400 to 500 retail outlets in North Karnataka, South Maharashtra, and Goa. But as we speak, we are already increasing our footprints in, we're going, let's say, another 100 kilometers in depth on all the directions. And when we go towards Maharashtra, we are going all the way to Karada and Satara. And when we are going towards east, we are reaching out to the eastern part of Karnataka, and then in Sholapur. And southeastern region, we are going all the way up to closer to, not closer to Bangalore, but in that direction itself. So that is the strategy what we have adopted, and as we speak, we are already implementing some sales narratives to handle the expanded capacity. In FY24, like discussed earlier, we are expecting the plant to commission in November or December, and basically the plant will be to 3 times the capacity, and we would be expecting certain enhanced revenue generation in the Q4. So, regarding power, even though we are consuming around out of 37 megawatt peak what we are producing, we are consuming about 15 to 16 or about 18 megawatt of power. But once the plant gets commissioned, we will be consuming around 35 megawatt of power for self use, and probably sell the power very less outside.
Okay, sir. Great, sir. And also I wanted to ask that how have cement prices fluctuated in FY24, and what is your outlook for the price movements in FY25?
So FY24 compared to earlier years or earlier quarters, price has dipped a little, even though there are certain dispatches happening, but price gave a dip of around 0.5 to 1%. FY25 first quarter being into election year, we have not seen a significant uptick. In fact, there was a jump in pricing in the beginning of Q1, but that collapsed immediately within a week or so, which could not withstand. And after the elections, by the time new government settles in, so it might take a while. So I wouldn't be very optimistic about Q1. Q2 being a monsoons will continue to perform very similar or a little better than the last thing. But I'm pretty sure that Q3 and Q4 will start becoming a huge drawdown for infrastructure, because the new government will be in place, and with the challenges like unemployment, other things, construction industry is known to be given the highest level of an employment creator. So overall for the year, I have a very good outlook on a year-to-year basis, but couple of quarters are going to be a little slow as we because of the election and the ongoing monsoon now.
Okay. And sir, any insights on the working capital and any steps is taken to optimize it?
So our working cycle, inventory days and other things are pretty much at par with lot of cement plants. But like we said, as we, in fact, inventory days has reduced from around 215 to 140 days for our plant, and that will continue to reduce going forward as we keep adding the profitability, new cash flow generation, other things. It is going to be stabilized even further.
Okay. And so we raised funds in 24, right?
Correct.
So how much of these funds have been deployed so far, and in which areas?
So typically we raise fund in two categories. One is secured a debt of 80 crores. Out of 80 crores, 58 crores have been dispersed. And out of 45 crore preferential allotment via warrants and equity, entire 45 crores have been raised as of now. So with these two funds, all this has been deployed towards expanding the cement capacity from 0.35 million ton to 1 million ton as we speak.
Oh, okay, sir. Okay, sir. That's all, sir. Thank you so much.
Thank you.
Thank you. The next question is from the line of Pratik Deria, an individual investor. Please go ahead.
Yeah, thanks for the opportunity. So my question is regarding your solar power plant. So you said that you would be consuming the entire capacity once the new capacity goes live. So just wanted your thoughts until that point. Do you expect any increase in power realization, that price realization for the power that you will be selling? And once, so that is the first question. And second question is regarding the expansion in solar power capacity. So I think you mentioned we'll go from 35 to 38, if I'm not wrong, or probably 40. The increased capacity, will that be used to sell or will that be also consumed?
Definitely. So the first question is regarding the power price realization. So let's say, for example, the power realization, net power realization, price realization has been going down quarter on quarter. So if I give a brief idea, even though our on average price for the entire year was about 6.89 rupees, but quarter on quarter, if I give you, it was like it started off with 7.01 rupees in quarter one, which has come down to 6.53. So it might stabilize around 6.2 to 6.5, where it's likely to stabilize. However, to me, it's not a very significant concern because our solar revenues will stop once the new plant comes up. So we just have to, for the next 9 months, Q1, Q2, Q3, we will have to be content with whatever pricing we can get from the market. And regarding solar and utilization factor, pretty much. So let me give an understanding of the generation itself. So we are generating about 56 million units for in FY24, and that will, after adding another 3 megawatt. So our current capacity is 37 megawatt. Another 3 megawatt added will add around 4.5 million units. So typically around from 56 million, it will go to 60.5 million units. So 60.5 million units, even if I run my plant at around 80% capacity utilization, I'll be consuming most of the power. But since initially we are expected to, capacity utilization is targeted to be around 60%, whatever residual power, we will sell it. So that new 3 megawatt, what we are adding right now, initially we will be selling it till our capacity utilization reaches around 75 to 80%. And at that point in time, the entire power what we have produced will go exclusively into captive consumption.
Okay, got it. And in terms of scaling up your plant, new overall capacity utilization, so you anticipate the new capacity to go live say around November, December this year. So can you give some guidance on how do you see the capacity utilization inching up quarter on quarter from that time?
Sure. So let's say, in all realistic sense, Q4 will be the first quarter where we are past any, trial production, the issues, teething issues and all those things. For the entire year, we have projected a capacity utilization of around 60% for FY26. In the beginning, cement is not a material where we can store it for a very long time, which means that, whatever is produced, typically we have to sell it within a short period of time, which obviously means that our marketing effort, sales effort has to coincide with the production levels. Even though we might do a lot of marketing now, the actual production will give the impetus to the sales. Having said that, quarter on quarter, I would assume that if 60% is what we have targeted next quarter, which means that from current 2.44 lakh tons in FY26, it should be around 6.5 lakh tons. FY26 and FY24 maybe around 3.3 to about 3.5 lakh tons is what we are realistically targeting.
Okay, got it. Thank you.
Thank you. The next question is on the line of Manisha Agarwal, an individual investor. Please go ahead. Manisha, your line is in the talk mode. Please go ahead. As there's no response from the current participant, we'll move on to the next. That is on the line of Akhilesh B, an individual investor. Please go ahead.
Hi, sir. Thank you for taking my question. Most of them are answered, but can you also comment on the EBITDA per ton expectation for next year once the full capacity is available to us?
Absolutely. So what I'll do is I'll give a fair view on what happened in the last couple of years. Last year, my EBITDA per metric ton, excluding the benefits of power. See, the reason I always exclude the benefits of power is because it would be a right apple-to-apple comparison. So we are only 57 rupees EBITDA per metric ton in FY23, which rose up to 200 rupees in FY24. But in FY25, FY25 this year, it is going to be definitely more than 200 rupees. But FY26 is the place where the entire new capacity, the new modernized plant would be in place. So there we are targeting about 900 to 1,000 rupees per metric ton EBITDA exclusively for cement. That is excluding any benefits of power. If you include the benefits of power, we would be reaching upwards of 1,500 rupees per metric ton. In fact, if you consider the power benefits, we have already reached around 1,400 to 1,500 this year and last year itself. So it is going to be better than this in any case because of optimization of the cement plant and the production.
Right, sir. No, that is the right way. So exclude the power benefit to take it at market rate. So 900 to 1,000 in FY26. And sir, in some earlier interactions, you had mentioned that we are currently kind of a tier 3 player, and so there is a certain delta in pricing between us and tier 2 and tier 1. So now with the expanded capacity, do you think there will be some benefit in the pricing and the realization also? Will the gap reduce next year?
Yes. In fact, the EBITDA margins, what I mentioned is excluding those benefits. So that benefit will accrue over a course of time, over 2 or 3 years, because there is going to be a significant marketing and sales efforts before we start reaching the tier 2 players. But having said that, that delta, which is almost like right now it's about 600 rupees per metric ton, we will be able to cover at least 300 to 400 rupees in the span of 2 to 3 years. It might take a while before we reach the similar levels. But there is going to be some progress in that direction there too.
This 60 rupees gap is with tier 2 or with tier 1?
600 rupees per metric ton is with tier 2.
With
and
tier
with tier 1 it is almost 1,000 rupees to 1,200 rupees gap.
So almost 40-50 rupees per plant.
Yeah. Sometimes 60 rupees. So if I give an approximation, like let's say we are supplying cement to Goa, our delivered price is somewhere around 280 or so, but if I'm not mistaken, the tier 1 brands have reached about 380 to 400 rupees over there.
So over and above this 900 to 1,000 EBITDA per ton of FY26, maybe FY26, 27, 28, every year we can have additional 100 rupee increase in EBITDA from this delta also reducing between us and tier 2.
Absolutely. But this 900,000 I mentioned for FY26. FY25, since all the 3 quarters have been utilized with the old production capacity, and starting with Q4, we may realistically not be able to reach 900 to 1,000 for FY25. FY26, yes. And as the delta keeps getting closing in, that scope is always going to be there in our favor.
And you feel you can do this with the existing brands you have, or you have to launch some new brand in a new name to get to that?
No, absolutely with the same brand. Our brand is also well known around here. In fact, it is accepted by all the departments. You talk about irrigation department or any government department and all the large infrastructure projects. It's just that we are not able to give a longer vision on pricing because of the smaller capacity and other factors. Otherwise, quality-wise, brand-wise, we are already up to mark.
Thank you very much, sir, for answering all the questions, and exciting time for the company. Wish you the best.
Thank you, Akhilesh. Yes.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. Participants, to ask a question, you may please press star and 1. The next question is on the line of Manisha Agarwal, an individual investor. Please go ahead. Manisha, your line is in the talk mode. Please go ahead.
Yeah, hello. Am I audible?
Yes, ma'am. Can you speak a bit louder?
Yeah, right now I'm audible?
Please proceed.
Yeah, sure. Hi. Hello.
Yeah, Manisha, please go ahead. Good evening.
Sir, actually just want to know what is your capital expenditure plan for the financial year 25 and 26? And how do you going to align with your growth strategy?
So as of now, the only capex that we are discussing is the existing cement plant capex, which will complete in this financial year. Since we have already spent around 100 crores in last financial year, the balance will be spent around this, about 25 crores on cement and another about 10 crores on 3 megawatt of solar power. Other than that, as such, the management is working on the new plants, but that we will discuss as and when it crystallizes.
Yes. And just want to know what is the expected return on investment along with the current capex initiative, particularly the cement plant and the solar capacity expansion.
Okay, so yeah, sure. So with the expanded capacity, there is going to be a significant increase in the ROI, maybe up to 20 to 22%. And regarding solar power, like we mentioned earlier, we are generating about 56 million units last year, and with this capacity addition, it will reach up to 60.5 million units. So, and even the capacity of the cement plant, it will increase from 0.35 to 1 million ton, which is 3 times the capacity. The whole idea behind the expansion or the debottlenecking is that currently we are using power and fuel very inefficiently. This is a plant which we had purchased in auction in 2007, and we could only modify it to a certain extent, which means that, for example, industry is consuming fuel at the rate of about 650 to 700 kilocalories per ton of OPC cement, whereas we are consuming around 1100 to 1200 kilocalories, which is significantly higher than the market. That is one point. Second point is our power consumption is upwards in the range of 100 to 110 units per ton of cement, whereas the industry is already reached at around 55 to 60 units. But with this debottlenecking, we will come close to what they are doing. So from 1100 calories, we'll reach around 750 kilocalories to 800 kilocalories, which will save about 350 to 400 rupees per metric ton of cement. Same thing with power, we'll save another 300 rupees because our power consumption will come down from 110 units to around 65 to 70 units. Apart from that, there is no significant increase in the other fixed costs, the other expenses, because the plant is going to be highly automized and with all the features like PLC and computerized control, because of which there is going to be a delta benefit on the fixed cost per metric ton. So all put together, we are expecting about 700 to about 900 rupees delta EBITDA to add up to the existing EBITDA. So that's how the plan has been crystallized. Sorry, go ahead.
Okay, that's really sound initiative from your side. And other question is that I can see that your long-term borrowing is increasing. So just want to know, are you prioritizing your debt repayment with the fund raised, or what will be your debt management strategy for the future?
Sure. In fact, our debt has been reducing over the few years. our debt has reduced from 173 crores to 140 crores. But what has happened is in FY24 figures, you will see around 58 crores debt that has been taken for the new project. So if you exclude that, because typically the debt what you should see on the book is for the existing capacity, it has reduced from 173 to 140 crores. It is just that even though the new debt is showing up on the books, the interest is going to be capitalized, so it won't impact the P&L. So overall, if you look at debt per capita, the debt per capita of capacity will reduce as we increase the capacity significantly.
Okay. And can you highlight the revenue and profit target for the next 2-3 years and the strategies, initiatives that will going to drive these goals?
Definitely. So we are typically targeting about 60 to 65% capacity utilization for this year, because the new capacity addition this year is going to be in the last quarter, and around 65% in the next year, and around 75% in FY27. So with that, basically based on the projections, we are able to see around 300 to 350 crore as a top line. Similarly, EBITDA for FY26 is with a 65% capacity utilization, we should be able to reach between 90 to 100 crores and around 115 to 120 crores in FY27. So that's a foresight what we see based on the existing cost and other structures. And management is pretty confident that with additional capacity and additional sales and efficient plant, we should be able to achieve certain figures. Hello, Manisha. Yeah.
Yeah. Okay, sir. Thank you for the update.
Thank you.
Thank you. Ladies and gentlemen, that is the last question. I now hand the conference over to Mr. Abhishek Yadav for his closing comments.
Thank you. Thank you everyone for joining the conference call of Shri Keshav Cements and Infra Limited. If you have any queries, you can write us at info@kirinadvisors.com. And once more, many thanks to the management team and participants for joining the conference call. Thank you.
Thank you, everyone.
Thank you, members of the management team. Ladies and gentlemen, on behalf of Kirin Advisors Private Limited, that concludes this conference call. We thank you for joining us, and you may now disconnect your lines. Thank you.